So, what are the components of lease liability and right to use of an asset? Lease liability includes the fixed payment from the commencement date, which is your lease payments, certain variable payments if they are part of the lease agreement, residual value guarantee, which at the end of the lease term, it is a guarantee which lessee has to pay to the lessor, excise price of purchase options if it is part of the contract, and termination penalties if any. So these contains the component of lease liability. Now, what are the components of right to use of an asset? Right to use of an asset is again a sum of lease liability, so your lease liability payments determined before, plus initial direct cost, cost of removing and restoring the asset, and payments made prior to commencement, minus if any lease incentives received. So now IFRS 16 requires lease liability to be measured initially at present value of unpaid lease payments. At the commencement date, the lease liability should be measured at the present value of the lease payments that are not paid to date. So so how do you measure the present value of lease payments? So the present value of the lease payments have to be measured using the discounting rate. The discounting rate to be used is should be the lease payments should be discounted using either of the interest rate implicit in the lease, or if the interest rate implicit cannot be determined readily, then the lessee's incremental borrowing rate. In practice, I've seen people using more incremental borrowing rate rather than implicit rate because the standard says the interest rate implicit in the lease is the rate that yields the present value of lease payments and unguaranteed residual value equal to the sum of fair value of the underlying asset and any initial direct cost of lessor. So you have to technically determine the interest rate implicit by discounting your lease payments and any residual value guarantees equal to the fair value of the asset. So which rate by discounting your lease payments is almost equal to your fair value of an asset is the implicit rate of interest, which is tough to determine sometimes. And then I've seen people using incremental borrowing rate when discounting the lease liability to the present value of the lease payments.